Hello everyone, welcome back to another video. In today's video, we're going to discuss how we can use the footprint charts and volume profile to find our support and resistance zones, to find good intraday trades and if possible extend it to a day or two. So this is a directional strategy, of course, that we're going to use with the help of footprint charts and volume profile. They're very powerful tools, both of them. So firstly, the platform that I'm using over here is Quantower. So I'll just shift over to my other screen so that you can see where to open your charts, so you can see this is the Quantower panel that pops up. If you're not familiar to it, we can have another video on this, but you can go in my last video section. You will see how I configured my charts initially. So I have just got these 5 panels as favorites over here so that I can immediately open a chart. What I'll do is I'll shift back to my other display so we can see the chart and understand what we're going to discuss over here. So the first thing that we're going to do is, this is a 5-minute chart, okay, and it's a plain 5-minute candlestick chart, and it's got nothing on it as of now. So we'll start one by one and go deep into it. So what we are going to do is we'll just discuss. Firstly, we will plot custom profiles. So one way of doing it is having I'll just show you, is step profile like this. You go here and you switch on this from here for a daily profile, and you get the profiles plotted like this, as you can see over here, okay. If you want to change the settings, you can just go here and change whatever you want, the way you want to color it, and extend POC. So everything is here. Again, if you want something additional in it, we can have another video on that. And for the moment, what we'll do is we'll just reduce the opacity so that we have it we can see everything together very clean, okay. So you can see this chart. This is a volume profile chart. The other thing that might confuse you is firstly, this is a Nifty futures chart, okay. If you on Quantower, if you go to Nifty spot, you will get volume there as well. So don't confuse, we're going to use Nifty futures. Why a lot of people ask me is because the footprint data and the volume profile data would be from futures, because that is what is traded. Nifty spot is not traded. So I want to know the instrument and the orders that are getting triggered in real time on a chart that is actually being traded. Nifty spot isn't being traded. So for us, although for finding support resistance zones, if you're using plain candlesticks, Nifty spot might do you good. But when we're talking about footprint and volume profiles, it is essential that you choose Nifty futures, as the number of orders that are getting traded are clearly visible in this chart, okay. And the next thing I'm going to do is, so this is a daily volume profile that you can see. So it starts from 7th February till the latest that we have is the 16th of February that we had recently, okay. Now the next thing I'm going to do is I'm going to shift this to a 15-minute time frame, because we're going to first I'll just shift it to 15 minutes and apply. So what we're going to do today is go back in time, and I'll just delete this. So what we had plotted, just a minute, we go and delete the previous custom profiles. So we have gone here to a little back. Let me delete this as well. And why we are doing this, I am trying to find out, like, whenever you see a swing zone or swing area being formed, we always get confused whether we want to take a long or a short from there, and how do we go about it. So we're going to use this particular feature along with the custom profile and footprint to actually get a trade entries, okay. So as you can see, these the POCs, daily profile POCs, are already plotted. Now let's get into the regions that interest us, okay. First, we mark these zones with the help of volume profile. We understand the market structure, and then go into finer details using footprint. So whenever the market approaches a zone, we get a confidence and we move and take a trade with a good risk reward, an intraday trade or a swing trade, whatever you want to do. So firstly, when you see a trend day, okay, like this, so volume profile becomes of immense importance, even footprint chart, when you see days like this, okay. So because there's a lot of volume that has been transacted here, of course we can switch on the volume also. Just a minute, I'll delete this. You can go here and set up time histogram, okay, and when you select it, you can have the volumes below, which will just come up like this, and you can choose whatever you want from here, delta, and there is a plethora of options. You can go there and check it. It's okay. So as soon as you see a day like this that has come up, you will see a lot of volumes were transacted. You can just go left and right and see this is a day with high volumes. Now this is the day where you will get a lot of important reference points. So immediately the first one that is coming up is this POC point, and it will obviously be extended on its own till the time it is broken. The next thing what we do is we go to the custom profile over here. Okay, you can see over here we select custom profile, and we want a profile from this place to this end of this point. Okay, why am I doing this? Because I know for sure I will get a lot of information in this particular zone. Okay, just let me put it properly, and there you go. Okay, the next thing I do is I go to this part. You can go to the settings also and do this is being plotted on a tick size of 1, so I do not want it that small. What I generally do is, for a profile like that, I have it somewhere close to 50 or 60, and I press enter. So straight away you will see the profile shapes change. So this is very important if you guys miss it. So I've changed it to 60 ticks for a daily profile, or for a pullback or a pull. If you see, this is about let me get this straight. Okay, so this is about I'm going to shrink this chart. We need the order flow chart as well later on. So what we're getting it is for about, let's see, it's 750 to, it's almost a 550 point move. Okay, so I have plotted the volume profile for that. Now over here again I see the daily profile is the same. If the daily profile, I'll just switch off the daily profile for now. So we'll switch off the step profile for now, and then switch it on later. Okay, so the custom profile is plotting this particular day, and I know immediately that this is my zone, which is important. Of course this has been extended as soon as we switch on the daily profile. And the next place that is of high volume and good significance to us, I'll just go there and mark this one. So if you see, this is the zone, this node over here, and the other one is, it gets marked automatically. So whenever the price approaches this zone, I will know what I have to do. This is the zone. Okay, and then we'll just go into the footprint charts and refine it even further. The next one is when we see a significant up move is let's go over here, and this is the one place where I see a good up move. So I see a 550 to almost 22,150. So this up move obviously has some volumes that has made this go up like that. So what I do is I go here and extend it, the profile, custom profile, to this part, and I get a volume profile again, and again I go here and switch it to 60 and press enter. Okay, so now I'm going to mark my zones again. So what you see over here are the value area high and low. If you want to change that, you can simply go to the settings over here. Okay, and you get the settings over here, custom profile settings, and you can, extend POC under intersection is what we want. Show POC ray will what it will give a sort of a ray, and you can also have show secondary POC which is colored in white. So I will not switch on the secondary POC as of now. You can see it is here. We'll just have the future POC under intersection, and the value area can be configured in the same way like you see over here. The next thing what we're going to do is we're just going to go here and switch it to none. Okay, so why I have done that is, now I don't want any borders to be showing. I just want my profile to be very clean and neat, and I want to mark the zones so that I can carry them forward for later use. Okay, the next thing I do is I see this particular zone wherein a lot of volume was clustered, and the market moved up, and it obviously acted as a zone of support, and it got somewhere. So what I'll do is I'll again mark this zone. Okay, and this is somewhere here, and I will just adjust it properly. Okay, so this is one zone. Now the other zone where I saw the move start from is somewhere here. Okay, again it is from a candlestick chart. Also you can look at the support and resistance zones, but in volume profile you get the exact point where the huge volume was transacted. So this is the zone. Let me just configure it properly. So 595 sort of a zone. Okay, now the next thing I do is, after plotting these zones, when the market has gone up, I'm going to look for places whenever there is a pullback to this zone, and how I can make use of that trade. So before I do that, what I'll do is I will step into the footprint chart in the similar manner. So I get a chart like this. Okay, I'll switch off the trading panel. I'll just a minute, I just minimize this one and have it configured into R like this. Okay, so I'll go ahead and switch it to 15 minutes and apply. Okay, now on this chart, what we're going to primarily do is have our cluster chart or the footprint charts. I'm going to have the imbalance mode on, and I'm going to enable it. And what this will do is, again, you can go to the settings over here, and I'm coloring it by volume because I want to see the places where a lot of volume was transacted in a similar fashion. We're going to discuss the different strategies of footprint later on. In this particular one, we're going to use volume and the buying and the selling strength, or the aggression, in other words. Okay, so the imbalance ratio is set to 3, nothing else. And the stacked imbalances and the other settings, you can just have a look by pausing it. I'm going to disable this for some time and just show these 3. Okay, and the delta divergence being shown. Now what I'm going to do is, I'm going to go to this area on 31st, or which is this area, yeah, 31st of January. Okay, and we'll see on a footprint chart what was actually happening over here. So this is the area, if I'm not wrong, this is the one. Okay, so as you can see, again, this is a nifty spot chart. So what, as I just said, you have to be careful about that, so then you don't confuse your levels. And we'll go down and select nifty futures. Okay, so now we'll go to 31st of January and have our charts, the footprint charts for 31st of January, and then have a look of how we can go about plotting our support and resistance zones over there. So this is the first day over here, and let me just extend it, and then we will configure it so that you guys get comfortable how to do this. So let me just do it. So I'll just show you the settings that I have on here. So if you select the default settings, the tick size will be obviously a little larger, so you can choose what you want. I just prefer it to be about 60 to 80 at max, depending on the volatility, so that I get the zones that are marked quite I mean, they pop out quite significantly and are of great use. So immediately I'll just expand and show you the numbers. So when I see this chart, okay, I'll just have this marker on, so I can straight away see this is the zone where I could see a lot of interaction between buyers and sellers, and the price obviously moved up with the delta change also of 4,000. This delta change is a comparison of delta with the previous bar, that is the close of the bar. So I'm not interested at this moment in the first 15-minute bar of for delta change, but what I see is a huge delta. Okay, and I'll switch on the time histogram as well, so that we can see the data that was going on. So what I do is I beg your pardon, time statistics, and I just want volume and delta and not cumulative delta at this point. I enable it, and what you see over here is that there was a lot of volume. Of course, you can see this number shaded a little darker. So obviously 15,380 is a very big number for a start. I mean, even for during the day. So all these high volume bars are really important when you're trading or finding zones, as they give you a good insight of the areas that can act as support and resistances in the future. So the next thing I do is I just mark this area, and this is my carry forward point. Now I just when I do this, I just go to the settings over here and I extend it to the right. You can just do this, and what it will do is it will extend it to the right, so you don't have to worry whether it carries forward till the end or not. The other part, now when I look at this, this is again 31st of January. So this 15-minute bar is now being shown over here like this. Now the amount of information that I can gather from here is, look at the volumes, of course, and now I have a clear zone. Okay, so this is almost similar to the zone that we marked here. Again, it was because of the volume profile that we had here. We could mark this zone and we can see what was actually happening over here. So there was a lot of interaction between buyers and sellers, and obviously the buyers are aggressive. So you see the initiative that is being taken over here. So this 347 over here, 831. So you see the imbalance in the buy side. that is happening over here. The other part that you can notice is, if you want, you can extend the zone up to this point where you can see the dark brown happening here. So even during this phase there was a lot of interaction, and you can carry forward this zone like this. I've done it because I want to be I don't want to extend it that further, and I would rather wait when the price comes to this zone over here and not wait, because this becomes almost a 30-40 point zone. So instead of confusing my mind, I will wait for it to come to this zone. Or if I see something on the footprint chart that is indicating to me that there is a buy aggression of some sort, I will position myself accordingly. So I'll just discuss what I mean by that. So you can see that this whole cluster has now become a good zone for buyers. That is, whenever I see the market come here next, I'm going to position myself on the long side. If I see something like this, that is, I see a buy aggression, a lot of absorption on the sell side. So over here you have not seen any sell absorption happening. It is an initiative buying, in the sense that as soon as the market opened, you see the buyers just go below the market just auctioned a little bit below the previous day low, and immediately there was an aggression by the buyers, and you can see what has happened, and a zone imbalance zone has formed. So this is another carry forward zone that we will take forward and see what happens with this zone. And if you were on this day and you saw something like this, two very high volume bars, the third volume, which was pullback, was again not that high of a volume, and the third bar over here, so, and absorption happening here, this was a very good long entry. So what you see here is on the imbalance side, you see a lot of imbalance coming in, a lot of buyers stepping in, and on these two bars, if you see, so there is only selling aggression, but the pullback is not good enough. And what I mean by that is, if you look at this particular bar, okay, so you see a lot of volume cluster that has happened here, and an imbalance that has happened here. Okay, now in the very next bar, you see sellers trying to break this down, they fail, and the next bar as well, they try to break it down and they fail again. So as soon as the price moves above this, you can shift to shorter time frames, and as soon as you see this again failing, so if you see when the bar started, this one, there was a negative delta, and the delta change was also quite significant, but the bar when it would have been going here would have shown negative delta, but immediately the whole thing changed, and the buyers stepped in again over here. The buyers who came in here and showed and they displayed their aggression over here. So this is the place where you could have entered a long position with a stop loss of this low, not even this place, because the last buyer that has come which you expect to step in is this one over here, who has shown some aggression on this side. So this could have been your stop loss. This is about 20 to 30 points, and for a 50-point target on the upside, which you could have taken looking at the previous day footprint in a similar manner. So we'll not go into intraday. Now what we'll do is, we will see whenever the price interacts next over here. So we will not even these zones you can mark, and you can have the similar sort of play like we just discussed, from the price moving in one direction. What we'll wait and what we're going to discuss is this point: has the market ever been able to come to this zone in the future, or even 652, which has shown such good aggression? If you see, the aggression was so good that the market couldn't even come here to test it once during the intraday. So this is a very important, this is how you can mark good balance zones. So you can go ahead and mark this one. I'll not do it for now because we know this zone. So whenever you see an imbalance zone acting out like this, where you see almost a 200-point move, so you are very sure that this aggressive buying is from some strong hand, and you can carry it forward. And whenever the market touches this point or the point below, like this one that we just marked, you can be ready for a long position. So we'll just wait and see if we could find another day if the market moved in this direction. So this is the 750, and let's see this one, what happened over here. So this is 9th of February. So you can see the market falling a lot on this point, and we'll just see which is this day. This is the 9th of February. So we'll just go to 9th of February and see what did we see on the footprint charts over there, so that was there something? So again, if you see something like this and a gap down the day after, for example, let's see what happened after this. I think the market opened gap down. So this is, again, like we said, the imbalance zone, which is causing a move of 500, I mean 100, 200 points. You can easily get a target of 50 points whenever the market approaches there the next time. So let's go to 9th of February and see what happened. This is the 6th of February. Let's go to the 9th of February, 7th, let's go 8th, and I think this is the 9th of February over here. Okay, so again, it is approaching the zone that we wanted, and unlike the last time, what we're going to see over here is responsive buying. Okay, so when the market approaches here for the first time in this zone, I am waiting for a pullback or at this zone, or some sort of absorption, because it's coming with so much of force over here. And when I see it halt like this, so over here as well, you can see a lot of volume that is clustered in this zone. Okay, and obviously you see the delta over here and the aggressive selling happening at these points. Okay, so this is the zone that I've marked, and if it is not broken, okay, so what is my condition to go long? Ideally I would have wanted to wait till the thing comes to this point, okay, 650 or odd levels. So if this does not come, I do not take a trade, because I don't know if it goes up and then comes again and then goes down. So if you are I mean, if your stop loss is above 30, 40, 50 points, this could have been a zone somewhere here. When you see this being cleared, these two zones, wherein first there was a negative delta and a delta flip of sorts happening. So we'll discuss about delta flip in our later videos, but you see this zone and you see the delta, and the delta change in this one, and the price closes on top. So even though the delta is negative, you see this might look as a negative bar, but you can straight away see this zone is being defended. So you can carry forward this zone for the next time and take a long trade with a stop loss of this low. But what I would have ideally wanted is a wait or a test of this zone. Let's see if it happens again anytime soon, so that we can again see this zone is tested. If you would have carried it forward, and finally this zone gets tested over here, and it again gives you almost a 100-point move. Okay, so the same thing has happened here as well, if you see. So when you initiate a long, so you see this absorption that is taking place. It has been this is a zone that we have carried forward. So this is the zone that is taking place, and the next bar you see again the cluster on the downside and absorption, and the market moves up. So you take a long somewhere here, and your stop loss is this, and again it is 1:2 is what at least you're expecting. So I'll just display what I'm looking at. I'll just show you. So if I'm looking at a bar like this, and I see a volume cluster on the downside, the down part, and a lot of negative delta in this zone, okay, something like this, okay, and aggression on the downside, and I see the bar close above this zone. The next bar is also attempting to do the same, but it doesn't even clear this zone. Okay, and another volume stack is formed here with negative delta here, and the market closes above this zone. I am ready to take a long with the stop loss of the low of this candle. So I hope you get this point. This is exactly what we've been having in the last 2-3 bars, and this is more prevalent on zones that we have marked. So this is the third time the market has attempted to break this zone and still gone above and given us almost 100 points. So the next time when the market approaches this zone, let's see. So I'll just delete this. So the next time the market approaches this zone, again this is the place where I'm really interested. It again tries to break this zone, and see what happens over here. This is a similar bar that I was trying over here. What happens is, look at the aggression. There is a cluster here and there is a cluster here. So I am looking at this cluster over here, and look at the aggression that is taking place, this 494, 224. So there is a lot of cluster, and it is formed, and the bar has closed above this zone. This is my indication that there is some sort of buying coming in again at this zone, and there is a strong hand who is trying to defend this zone, and this is, I mean, the third or the fourth time it is doing so, and again it has failed. And look at these clusters, continuous clusters that are formed here, if you look closely, and as soon as the price closes above this, this is my trigger to go long, and the stop loss would not be the low of this candle but just below this cluster over here. So if you see, it is about I think 30 to 40 points, and I'm expecting a 70 to 80 point at least in my favor to take this trade, and the market goes again in the other direction. Now the last thing before we close the video is we'll see this, what happened in this zone, that is 14th of February. Okay, so we'll just go to the 14th of February, and this is a zone, and this is exactly the place 652 where again the market opens gap down over here. Now this is a tricky situation, and we are expecting it to hold. This is a zone that we carried forward from almost 31st of January. Now look at this bar, okay, and look at what I mean by how good these zones act. Look at the delta. This is the highest delta, negative delta, that you would have seen in the previous few bars. Okay, if you go back minus 7,745, you wouldn't have seen in the last 10-12 days, but you saw in this bar. And look what happens, it just doesn't even test this zone. And the next bar, we see a lot of delta and a cluster of sorts forming here, and the next bar, the cluster is somewhere here, and I just take this zone forward. And when I see this being unable to even the same strategy that we just discussed, this cluster is just shifting upwards and not being able to break down. So whenever I see something like this, I enter my long here, and my stop loss is just below this zone. So it is just a 30-40 point stop loss, and again I'm expecting at least 60 to 70 points on this intraday trade. So when you're looking for trades in an intraday or positional basis, you can expect 1:2. We're going to discuss scalping in some videos in future, where again looking for 1:2 is not practical because you're entering in exiting quite fast. But these zones are of very good significance and can help you find great places to enter and exit. So in the coming few videos, what we'll do is we'll look into the future charts as well. So this is what has happened in the past. What we do in the coming videos is we'll look for zones that we can look out for in the future, and plan our trades accordingly. So hopefully this video was of some help to you guys. Until next time, thank you, bye bye.